Okay. So is it clear? Yes. Now, I want everyone to imagine one thing, and that is you are running a city. Every morning, thousands of people need money. Some need it to pay salary, some need it to pay suppliers, some needed to pay raw material to buy raw material, other have extra cash lying in their chests. Now, how do we connect these two groups? That's exactly the money market does. The three players which I told you, issuer, which is nothing but Government of India, SBI, Reliance, Tata Steel, who needs money? They always think, can someone lend me money, right? For a few weeks. Lenders are also available. These are organizations which has surplus cash, including mutual fund, insurance company, pension fund, bank, because people give them premiums, right? They give premium. Do they expect immediately return from that premium? Absolutely not. They keep it for 20 years. So those extra cash goes for funding these people. However, intermediary is not investment banker here. Intermediary is who? RBI, commercial banks and dealers. Think them as a matchmaker, as simple as that. During festival season like Diwali in India, companies pay employee bonuses before receiving payment from their customer, isn't it? Many borrow short-term money from bank or money market. 30 days later, customer payment arrive and loan gets repaid. Simple, right? 90% of corporate borrowing is for capital rather than for expansion. Okay, working capital is what gets funded through money market, not the capital one. So the equity when you raise, you go for capital investment. And when you do money market, you are doing for working capital. Difference, have you understood? That's how you have to match it. If your salary is delayed for 5 days, but your EMI is due today or tomorrow, what will you do? Most answer involve borrowing. Congratulations, you have understood completely the functioning of money market, right? You have understood the players, you have understood the issuers, lenders, etc. Now, how many of you have heard about this movie or have seen this movie? One of the cornerstone in finance world, specifically after the financial crisis. After the financial crisis, this movie became a cornerstone. Money market and financial crisis of 2008 is very much well linked. The movie name is Big Short. Remember this single event in 2008, and many people have covered as a project as well, when whole world, actually the global finance, which was evolving like anything, every day new products were getting launched by people like you, right? Many people thought 2008 crisis actually happened because the stock market crashed. That's what people believe, right? Suddenly one day market crashed, nobody has money to withdraw. Absolutely not. The stock market crash was only the symptom. The real disease began inside the money market, actually. So if you watch this movie, and it's again recommended movie, if you have time, please watch it. Yes, you will come to know the stock market was the symptom. The real disease was in money market. Imagine your entire neighborhood is lending money to each other. Everyone is lending to each other money. Everyone assumes someone else has checked because it's a neighborhood, right? So who checks who? Nobody checks to nobody. But everybody assumes somebody had checked, that guy is not running away with my money. That's what everybody was talking about. One family decide to run away from that locality. Suddenly everyone will panic. Oh my God, he took 1 crore and he ran away. You got the point. Earlier, nobody was even asking. They were just giving to each other. Okay, you want sugar? Take it today, give me tomorrow tea. Yeah, that's how people does in the neighborhood. Nobody thinks that that guy will be there tomorrow or not. When you are lending such a large money and that guy run away, you have a panic in whole market. Nobody will lend to no one. The whole neighborhood will freeze. Exactly that has happened in 2008. It was not a stock market crash. Actually, the money lending stopped immediately because the products like derivatives, etc., MBO, stop trading in the market. Banks begin lending huge amount to people who could not repay home loans. They were getting huge amount of money and they were not even able to pay their home loans. Those loans were packaged into securities. So when borrowers stopped paying them and bank around the world bought that securities. And now these guys who took that home loan, they stopped paying their home loans. Eventually, the another package which was developed, which was MBO or asset-backed security ABS, right? Or mortgage-backed obligations. All those products collapsed, and that's how the whole collapse in the market has been seen. So always remember, the genesis of financial crisis of 2008 was in money market, right? Is it clear? So what was the lesson? When Lehman Brothers collapsed on 15th September 2008, over $600 billion in asset, making it largest bankruptcy in the world. $600 billion he took and collapsed. That is why actually it collapsed. So what is the lesson? Finance doesn't fall because money disappears. Finance falls because trust, write it down, trust disappears. Money market survives only when participant trusts one another. Yeah. Would you lend 10,000 buck if you knew there was only 10% chance of getting it back? A small amount, even 1,000 rupees. Will you lend to somebody? Probably not. Bank thinks exactly the same way. Clear? Exactly like you. Now, if you want to understand the structure of Indian money market, you have to understand one thing. India has one of the world's largest financial system. But surprisingly, there isn't just one money market. There are multiple layers in Indian market. Imagine a shopping mall. You have a big shopping mall in Mall Road. Which road is it? The biggest one, the largest one in Chhattisgarh, in Raipur? Treasure Island. Treasure Island, right? So Treasure Island, if you know, ground floor sells clothes, second floor sells electronics, third floor might be selling a restaurant, yeah, having a restaurant, food court, yeah, movie theater, different sections, same building, right? Similarly, in India, has a different money market segments serving different needs. Suppose RBI wants to inject liquidity. They want to put some liquidity into the market. It doesn't randomly distribute money to everyone. Will they go come to you and give you money? Absolutely not. They uses different channel to traversing this money to you. Different instrument, different participants, and each has a specific purpose. So remember, whenever India market you will talk in terms of money market, remember word layer. They do not have one instrument on one area of money market. India banking sector today manages asset worth of hundreds of trillions of rupees, hundreds, making liquidity management daily necessity. Clear? And here comes one of the famous program called GSAP program of India. GSAP program, which is nothing but Government Security Acquisition Program. GSAP program, statistics are in front of you. This is little old statistics. This slide has introduced something which became famous during COVID-19. Okay, in COVID-19, GSAP was introduced, where Government Security Acquisition Program was launched. Imagine your father owns a grocery shop and customers suddenly stop buying during lockdown. This has happened. We know that, right? Many grocery shops were not attracting customers because nobody was traveling there. Cash flow for that grocery shop will stop, isn't it? It will collapse actually. So what if your uncle buy the unsold inventory immediately and say that I am going to distribute to people who are in need? Your shop survives, right? Your shop survives. And that is essentially what RBI did at the time of COVID. They bought all those money, which was happened to be liquid money, yeah, supposed to be given to other bank, but nobody was going to the banks. Hence, immediately that has dropped. RBI decided to introduce this program called GSAP program, right? Clear? Is it clear? Government needs money as well, right? It issues government securities and bank buy them. Later on, RBI purchases many of those security back and bank receives the cash. This is what happened in GSAP. Clear? Business will survive, bank will lend, and economy will keep moving. When customers are not there, when you are not going to borrow in the market, RBI has to borrow, right? Otherwise, what these banks will do? And this is what GSAP did. Why did RBI did that? Anyone? Why RBI has to do it? During COVID, of course, businesses stopped functioning, cash stopped flowing. Without intervention, bank would have become cautious, defunct. They would have stopped lending or even taking deposits. Loan would have reduced and economic recovery would have been delayed. So RBI injected liquidity by introducing GSAP. Take this security, give me your money. Yeah, and I will put it into the circulation. Interesting fact here is during GSAP, RBI announced purchase of government watch security 1 lakh crore in its first phase during 2021, helping to stabilize borrowing cost. Now, what happened if bank stop lending? What happened with that? Businesses suffer. As simple as that. Business will suffer. They will not have cash to give salaries. What they will do? They will reduce the job. They will stop hiring new people. What will happen then? These people who used to get salary, they are out of job. Will they spend? You think they will go in market and start buying Rolex watches and iPhones? Will they do that? Absolutely not. They don't have job. What will happen? The production will reduce and hence GDP will reduce. Everything is connected. That's why economics in finance is very important, right? Now, if you have understood this example, let's move on to another discussion, which is how organized money market is. How organized money market is. There are two worlds. One is organized one and one is unorganized one. Same like in bond market or equity market. You remember OTC and exchanges. Similarly, in money market also you have the same. Remember, organized means regulated. Organized means regulated, transparent, documented, and supervised. Fourth thing, what are the things? Organized means, so tomorrow if somebody asks you, what is organized? Organized means regulated, transparent, documented, and supervised. Everything happens under RBI regulation today. Everything. Okay. Participants in organized money markets are listed in front of you. Reserve Bank of India, commercial banks, regional rural banks, development banks, foreign banks, and financial institutions. Imagine two cricket matches are happening. One is ICC World Cup and IPL. In ICC or your gully cricket, right, where you just go with the a bat which is not even eligible for ICC matches. In ICC, everything will have rules, but in gully cricket, somebody will come and slap and take bat from you and he will start playing. Clear? This is how the organized and unorganized team works. Clear? So whenever SBI has to borrow overnight, RBI has to be informed. Record has to exist. Audit has to exist and risk need to be monitored. Remember, India has thousands of scheduled banks today. They have thousands of branches operating under 68 different banking entities. 32 are scheduled ones under RBI regulations. So when they do this exchange, they are into regulatory market. Is it clear? They are into organized regulated market. There are unorganized market as well. Unorganized money market is that gully cricket which is happening next door, right? Somebody will come, slap, I will bat. Somebody will come and say, your ball is in my house, I will not return. Yeah, completely chaos, but fun, right? But it is unorganized, remember. What does this mean? There will be money lenders, sahukars. There will be local financiers. There will be chit fund entities. There will be friend, family, and fools. 3Fs. Friend, family, and fools. They will exchange the money with you. Traditional lenders, etc. comes here. Here who are missing? RBI is missing. Commercial banks is missing. Clear? The story goes like this. Your uncle lended you 50,000, no paperwork, no bank, no RBI, no digital result records. And that is an organized market, as simple as that. How many have you borrowed from your relatives? And you know the pressure, right? There is no pressure with relative. Oh, आएंगे तो उस दिन घर में नहीं रहने का. Many hands go up. Congratulations. You have experienced the unorganized market already. Or you have taken from your mother, right? She will ask, but will she ask now? She will ask when you learn the money. Advantage of this money market is quick because it comes from the rice jar, right? Rice का jar है, उसमें छुपा के मम्मा ने रखा, आपको दे दिया. It is flexible. You want to pay today, tomorrow, after 10 years, they don't care. Of course, it has to be short term if it is money market, but I'm just telling you for a fact. Minimal paperwork, there is no paperwork even required. Very high interest will be there, by the way. She will give you 100 today. My daughter, sometimes gives me money 100 rupees, and then I have to pay 500 rupees back to her. Yes, that is what very high interest means. Limited legal protection and poor transparency. That's the problem of unorganized real market, money market. The real example here is many small businesses in India uses this market. They are dependent on them. Clear? Now, there is a sub-markets. There are sub-market, money markets like hospitals. It's like a hospital. Hospital has different department, right? Cardiology, neurology, orthopedics, yeah, the kids ones. Similarly, the money market has a specialist departments. They have different departments and they are known as call money, one day borrowing. Call money, one day borrowing. There are bill markets, which are nothing but trading commercial or treasury bills. They are bill market. That's why you must have heard name called T-bill. Have you heard T-bill? Treasury bill. Those are bill market. So call money is one day borrowing. Bill market is for treasury bills. And then there are CPs called commercial papers. They are nothing but corporate borrowing. So when corporate issues such kind of document, they are borrowing commercial papers. Certificate of deposit, CDs, they are again bank borrowing. So difference, are you noting? Guys, are you writing that difference? Otherwise you will forget. Again, I'm repeating for the purpose of you are writing it. Call money is one day borrowing. Bill market, trading commercial and treasury bills, T-bills. Commercial papers, corporate borrowing. Certificate of deposit, bank borrowing. Treasury bills, government borrowing. Clear? Imagine Amazon has a different department to handle different deliveries, payments, return, customer support. Each has a specialist there. Finance works in the similar manner. Based on which specialization you need, you will go to that particular instrument. Not all instrument you will try. Clear? Otherwise, patient will die. If you will send a patient, a person who has a broken knee, you send it to a dental guy. Will he survive? Of course not. He will break his teeth as well, and then when he will come out, he will be dead nearly because teeth is gone, leg and even has gone, and that is why you have to go to the right instrument at right point in time. If you only need money for tonight, others or Mohit, would you take a 5-year loan? आज के लिए आपको पैसा चाहिए, घर जाना है, you need some cash. Will you take 5-year का loan?
No, sir.
Absolutely no, right, Mohit? So everyone started laughing like this. Exactly. That different needs require different market. Now, what are the different types of money market instrument? There is a call money, there is a treasury bill, there is a commercial paper, there is a CDs and repos. I have already explained those. Let's go deep dive, right? Each of them. This slide, probably you should take a screenshot. One of the most important slide for the day. Take a screenshot of this. Okay, and we will stop the session after this. These are actual tools used every day. Borrowing for one day is call money, right? Mostly does by banks. So who uses call money? Banks. Think borrowing sugar from your neighbor, returning it tomorrow morning. When he needs the tea, he will come to you or you go and give it to them. Clear? That's call money. Call money, you got it? This is that market where bank borrow overnight basis. So bank is involved, overnight facilities involved. Facilities are always short-term liquidity management and the interest rate market is determined here. What is the advantage of this market? The interest rate in the market, the short term, long term, all borrowing interest rate gets decided here. Because when bank lends to each other, they know the cost of their capital, right? For overnight. So once you know for a night how much is the cost, eventually you will know how much is required for 30 days, how much it is required for 360 days, how much it is required for 90 days. And that's how call money market works. Clear? Now comes the treasury bills. Treasury bills is nothing but government borrowing. Call money is bank borrowing, treasury bills is government borrowing. Safest instrument, because sovereign is giving you the guarantee. Country is giving you the guarantee. So safest investment. So what is the characteristic of treasury bill market? Government borrowing, safest investment, and issued always at discount and redeemed at par. Write it down. Issued always at discount, redeemed at par. You remember zero coupon bond? Most of them are treasury bills. Zero coupon bond, most of them are treasury bill. Why? Because they are always issued at discount and converted at face value. Right? Issued by the government to meet the short-term need of the government. It is a platform for trading among the different banks, financial institution as well, right? And issued always at discount to their face value and matured at par. It is always said as at par. Now, commercial paper. Large company borrows without any collateral through commercial paper. So there is no collateral behind commercial paper. So this is the characteristics number one. Commercial paper will have any collateral? Absolutely not. Bond can have it? Yes, bond may have it if the tranche is very high, right? If the tranche has a secured bond, right? If it is a secured bond, of course, you will have a collateral. But commercial people paper definitely do not have any collateral. Large company borrows like this. Example, if Reliance has to borrow, Tata has to borrow, Infosys has to borrow, they borrow because investor trust them. Then comes certificate of deposit market. Bank borrows from investor. Bank issued CDs. They will issue what? Certificate of deposits. And investor will earn a interest. Where bank issues a negotiable certificate is called certificate of deposit. Mostly institutional investors are involved and they invest in this CD as a safe and liquid investment option. That's what they believe. That's why they borrow in this market or give in this market. And last but not least is repurchase agreement. One of the most famous instrument of the market. Repurchase agreement, where participants engage in short-term borrowing and lending transaction using GSECs. This is the GSEC, famous GSEC of India. Yeah, that is the government security, G-SEC as a collateral. Collateral is what? Government security. So repo has a collateral. Remember, treasury bill has no collateral. Commercial paper, no collateral. CDs, no collateral. But repo will always have a collateral in form of government security. Clear? That is why repo is little more valuable than even treasury bill. But treasury bill is more valuable because of the government backing. Clear? But definitely certificate of deposit versus repo will be more valuable. Interest will be lesser. Clear? Because it's a high quality document. Probably the most important one in the world is repurchase agreement. Imagine you are selling your laptop through which you have joined right now. You want to sell it to your friend today itself, but promising I will buy it back tomorrow when I will come to office. You want to just sell it for a night because you want some cash to go to home. That's repo. You are giving that laptop as a collateral. Is it clear? What is repo? Repurchase agreement. It is done with a collateral. Bank temporarily sell government securities, which government securities means what? When they keep this 14% into RBI, they get a certificate, right? That is government security, GSEC. They give this GSEC as a collateral and get some cash for tonight service. Are you getting my points? When you go to ATM in night, you are living right now, right, Mohit? You're going to leave office now. You need some cash to get some chocolates to your friends, to your family. Yeah, बच्चे होंगे घर पे, उनको चॉकलेट चाहिए, मोहित भैया आ रहे हैं job से, they will bring something today. You will go to ATM, take the money, and bank doesn't have that money right now. What will they do? They will go put that G security, which they have given it to the government of India as a collateral. They will put that to the another banker. That banker will put some money into ATM, through which Mohit will take that money and bring that chocolate to house. This is how this works. Is it clear? कोई डाउट है आज के क्लास में किसी को भी? थोड़ा मैं स्पीड पे गया हूं, because I am going to go in speed. I am seeing interest has gone down, so let me complete. Right? So anybody has not understood because of speed any part of it? Tell me now. Saurav, you want any clarification? Disha, others, Mohit, anyone?
No, sir.
No? Yeah, simple.
No, sir.
Very
No,
simple.
sir.
Yes, sir.
Real, with jokes, engagement, and interesting. Let's close the class for today. Don't take overload. Go and revise it if possible. The recording also will be provided for people who have not attended today. Maybe they will get benefited. Saurabh, please speak with Dr. Sheetal, find a solution. So I need only 4 classes for next month.
Yes, sir.
After that, when they are back in college, we can have 8 classes. But I need 4 classes for August for sure. Yeah,
Yes, sir.
find a solution. Let me know.
Yes, sir.
Thank you very much.
Yes, sir.
Bye bye. Take care.
Bye.
Thank you, sir.
Thank you so much.
Bye, sir.
Bye bye.